And welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. So far today we are seeing European equity markets and US markets for that matter, which have just opened, trading about even. We have seen some gains and some losses throughout the day, but really most things that we're looking at now, despite the volatility which we have had, are trading roughly around where they started the session. So we haven't seen any significant moves in either direction. It's not exactly been a quiet day either. We have had plenty to focus on. We've had retail sales from the UK, which we'll touch on in a second. We've had the ECB announcement. We've had some US data. Of course, there's been a large number of corporate earnings being released throughout the day, so all contributing really to this volatility. And yet, where we stand right now with the markets is pretty much, like I said, we haven't seen any moves that are overly substantial. I guess the one story which we had today, which we weren't expecting, was in relation to the Bank of Japan, and this caused a bit of a stir earlier on in the session. There was an interview that Haruhiko Kuroda, the governor of the Bank of Japan, carried out with BBC, in which he effectively said that helicopter money is not on the table. There's no need in it, and there's no possibility of it at this stage, and therefore effectively quashing the idea that has been building in the markets over the past couple of weeks, in particular, that this is a possibility from the Bank of Japan as kind of a last resort, because quantitative easing doesn't appear to be working. Negative rates didn't go down too well in Japan when they were announced. So we did actually see the yen strengthen quite considerably off the back of these remarks, and it has pared most of its gains, though at this stage. It's now down. The dollar yen is now down by 1/3 of 1%, and it has pared most of these gains. I think partly because the BBC said that this interview actually took place in mid-June, so it's a bit of an outdated viewpoint, I guess, at this stage, given that it was the last week or two that the market started to speculate about the possible adoption of helicopter money, and also I think the fact that really not the helicopter money. While we were seeing a broad monetary stimulus price in with the possibility of helicopter money potentially being priced in. I wouldn't suggest by any way that helicopter money was priced in any way considerably. So while we did get that sharp reaction to that, we are seeing it pair most of these gains now and trading not too far from where it was at the start of the session. I do still think we are going to see some form of monetary stimulus from the Bank of Japan, and I think that's what the markets are currently buying into. The other main event today, from a central bank perspective, was of course the European Central Bank decision and the press conference. And again, we did see volatility around the press conference itself. As expected, the ECB left interest rates and quantitative easing unchanged this month. That was expected simply because the Bank of England did the same move. Central banks currently not dealing with any data which supports the idea that the economies have suffered as a result of the UK's decision to leave the EU on the 23rd of June. So they're wanting to wait to see if there's any data which backs this up, which would enable them to act. The Bank of England, of course, next decision is next month. We'll have to wait until the start of September for the European Central Bank. A few notable points from this, though, was that Draghi did suggest that they'll need months to decide or to determine whether further stimulus is necessary. Initially, this had the euro rallying, potentially people seeing this as September not being necessarily months away, and therefore maybe further stimulus from ECB will come later on this year than they previously thought, if we do in fact see it. But then Mario Draghi did say a lot during the press conference which would suggest otherwise. He repeatedly stressed and very clearly that the ECB was able, ready and willing to act with all monetary policy tools at its disposal within its mandate, if necessary. He also kept talking about the economic projections which the governing Council will need if they're going to make such a decision, and the next batch of projections are due in September at the next meeting. So everything is still pointing as we expected prior to this press conference to further stimulus in September, if in fact we are going to see any. So I don't think anything's changed, and now the euro's trading back pretty much where it was prior to the press conference itself, despite the volatility which we have seen around it. Like I say, the other thing that we've had today is the economic data, and if I'll take you to the economic calendar now so you can see the list of today's events. And the first piece of data came from the UK. Again, this is somewhat outdated. It's retail sales from June prior to the Brexit vote, but it did show a big drop off in purchases in retail sales in the month of June. Now, initially, you'd look at this and think that it's probably a lot to do with anxiety and unease over the upcoming referendum vote and potential expectation that we could potentially vote to leave and the detrimental impact that could have for the economy. But the report suggests otherwise. The report suggests that the Brexit vote had little to do with it, and it was actually more to do with the unusual weather that we had in June, which had a bigger effect on sales. So maybe we'll see this rebound again in July, although then you'll have a number of other factors potentially playing into it. We haven't seen any evidence so far that spending has been curtailed in any way as a result of the Brexit vote, but I guess we'll have to wait and see how this plays out. The other data we've had today has come from the US. We've had initial jobless claims, again another strong figure, and also the Philly Fed Manufacturing Index, which dipped back to minus 2.9, so disappointing reading there. We do still have more data to come from the US today, but I think the key focal point was always going to be the ECB monetary policy decision and the press conference. And then going forward, I do think the biggest driver of sentiment going into the rest of the session is going to be the reaction to the earnings that were released ahead of the US Open, and looking ahead to the number of earnings reports which we do have coming again later on this evening. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.